Yo traders, what's good? So if you're new, welcome to the channel. If you've subbed up, welcome back. I salute every single one of you and I appreciate you all. So today's Wednesday the 3rd of December. I didn't trade shit today because price action's been horrible. Now this video is genuinely to keep your spirits high, show you that trading's still possible. We just need to adapt maybe, all right? So this strategy is going to be on the 1 minute time frame. We're going to be trading gold and it's going to be London and New York session. Now you can choose one or the other, but I'm about to get on the charts and show you what we will be looking for. We need some confirmations. I'm going to keep it simple, basic, but I'm telling you now, this strategy is fire. All right, so this is the gold chart. 1 minute time frame, and this is literally what's happening right now. So I'm going to put on the Lux Algo Sessions indicator and I'm going to be focusing on London session in New York. Now from 7 I call the pre-Londons, 8 o'clock London, and then yeah, but anyway, don't worry about that. So what you want to be looking at is the 25 EMA or the 50 EMA, and I'll explain when to change them. So if you come to the charts and you see this straight line going through it, we're consolidating. We don't want nothing to do with this, nothing to do with it. We need to see this, all right? We need to see price respecting a trend, respecting the EMA and creating a trend. Now, just because the EMA has been broken through a few times, does that make it invalid? No, it does not. And if you feel like it does, then you can just change to the 50 EMA. So just change to the 50 EMA, all right? Or even both. Fuck it, I like the both of them. Look at that, the 25 and the 50. So if we break through the 25 and we respect the 50, we're carrying on. We're carrying on, all right? So that's the first thing. We want to see this. We actually want to see this. So let's pull it back to when it was consolidating. So what do we do when we see price doing this? Well, we draw our consolidation boxes. So we got one there. It breaks out kind of, but still is doing this shit, right? So we know we're in a range. It's horrible, it's ugly, it's a range. Now, overall, this is the whole range. It's not doing nothing. It's just shit, all right? So yeah, you might look at it and go, there was little tiny opportunities. We don't want these tiny opportunities. We want to see price respecting the EMA, bouncing from it, creating trends. So we need to see some shit like this. Okay, nope, we're still technically in a consolidation, so we don't want anything to do with it until it breaks out. Right, cool. So now we're actually starting to trend, right? You can see that we're trending. Boom. So now we got this going on, an actual trend. I know that I've just retested this EMA. All right, so what am I looking for? Looking for a breakout. Okay, so you've got options. You can put your breakout line there, or you can put it there. I'm putting it there because that's my sniper entry, right? I'm putting my stop loss below the white EMA or the purple one. Depends how aggressive you want to be. This one you're likely to be stopped out. This one you're more likely to stay in it, but it's going to mess with your risk to reward ratio. So I'm an aggressive trader. I'm going to put it below the wicks, all right? That's a sniper entry. I'm going for a 1 to 2 minimum, all right? Or just to spice it up, I'll add my CAFX Liquidity Pro. Okay, it's showing me the first 1 hour take profits all the way up there. Am I going to let that run all the way? Am I going to expect it to run all the way there? Probably not. All right, so I'm just going to go for my 1 to 2 first, but understand that it is take profits above me. Boom. All right, cool. So kind of came close to stopping us out, but look, we hit this with no problem. We hit that with no problem. Now let's just say we grew some balls and we held it to go and get our liquidity, which we know most of the time is going to want to do. Boom. So it didn't take long for us to hit almost a 1, well, not almost, that's a 1 to 5 risk to reward ratio in, let's take a look. A 1 to 5 risk to reward ratio in 45 minutes. Now look, you wouldn't have had to hold it that long because you probably could have closed it on this. This is banging. That's a beautiful trade. It came back, it retested, whatever, boom. Give us an absolute beautiful push. And this only took 21 minutes. I'm on the charts way longer than 21 minutes every day with the pre-London and the London sessions, okay? But anyway, look, we got these big chunky 4-hour liquidities right above. It wants this. This is all fuel, okay? So that's how you catch beasts. But anyway, let's say you didn't catch that. Let's just remove all this shit. All right, so New York. Let's just pull it back. Let's take a look. All right, New York session's about to open. Same exact breakout strategy. A breakout line there. Now when New York opens, we get in, okay? We target the top. So we target the top of this, or we target liquidity, right? I'm usually using around about 3 to 4 points or pips, whatever you want to call that, 3 to 4, right? go watch my London session videos. You'll see that is true. Boom. Fucking boom. So that's the New York Open, all right? You don't actually have to trade the New York Open. Once again, if you want to avoid all the crazy volatility, we just wait. So now the New York session's open, all right? Let's take off this liquidity indicator so don't get us confused. What can we do? We can look for a shift, because what goes up must come down. Remember that. So if London's pushed all the way up and we got all this volume, we can expect a break to the downside during New York. Now, is that all the time? Is that certain? No. But majority of the time, look at this shit. Boom. Stop loss above them EMAs, or a 4 pip like I said. Nice tight one. And boom. And I'm sure if I had the liquidity indicator on it, there we go. There's the TPs right there. Let's pull it back and let's see. There we go. There's some TPs right there. First one, second one. Even the first one's decent. That's like a 2.4. Boom. Smash the both of them anyway. Smash the both of them. So that's perfect, right? Cool. Clean breakouts. 1 minute time frame. Was that today? I believe this was today. Yeah, that was today, man. So cool. That's the one. That's one example. Let's get rid of that shit and let's go back and check yesterday. All right, cool. London session. London session's 8 o'clock. Okay. 8 o'clock in the morning. So now we know we're still consolidating. We need some direction, all right? Still consolidating. All right, so you see this? You see this? All right, so take a look at what it's doing now. Take a look at what it's doing now. It's actually broken this like rangy consolidating kind of shit right there. And we're making new lows now. We're making new lows. We're starting to respect this EMA, all right? So I want to see a pullback. I want to get an opportunity to get in. Cool. So if we break below there now, I can do this. 4 pip stop, put on the CAFX Liquidity Pro. All right, cool. There's a nice 4-hour liquidity down there. Let's see how it runs. Boom. Fire. Now, that was yesterday. Tuesday. I avoided all of it. I didn't trade this. I didn't catch this because I was too focused on all this bullshit. And then I call it a day, walk away from the charts, and that happens. So, you know, it's more about adapting the strategy and being patient and looking for these trades. Now, let's say you didn't trade London. Say you didn't trade London, all right? You want to trade New York. What goes down also must come back up in trading, all right? So let's wait for the New York session to kick in. All right, so we're consolidating. Oh, okay, so this is before New York. This is before New York. But look at what happened after the drop. Take a look at it. All right, we get a bullish shift. So boom, we're consolidating. Boom, there we go. So we've stopped making new lower lows now, and we've just made a higher high. So what can we do? I mean, look, there's no rules to this. There's no fucking like, you need a specific time, you need to be there at the session open, you need to do this, you need to do that. No, this is just looking at price action and coming back to it and saying, okay, yeah, earlier on it was shit, but now I'm back 2 hours later and it's doing this. I'm waiting for a pullback and I'm getting in. You know what I mean? So let's wait for that pullback. Okay, fuck. Well, there was the pullback. There was the pullback. So you would have had to get in there. If you didn't catch that, then you would have missed it. But anyway, look at that. That's the point I'm trying to make to you. And then you get another opportunity when it pulls back there. What does it do? Boom. Do you understand what I'm trying to say to you? Look at these entries, right? Because all we're focusing on is the EMAs being respected. Is price, you know, got a little bit of a gap between the EMA, all right? So you also want to see a little bit of a gap between these the candles and the EMA. You don't want to just see the lines in the middle of the candles, because that means it's consolidating. Right now, this means it's trending. This is awesome. And look, there's the liquidity there. Maybe it even gets to this one there. All right, watch it. Watch it. See that? Now, would I have held that? No. Could I have held that? Yes. Would it have took my whole fucking day? No. Look at it. Would it took 2 hours? 2 hours for a 1-to-9 risk to reward ratio. This is how we need to start thinking and adapting. You know what I mean? If you're struggling with these stock market opens and shit. Now, let's just keep it running. I'm looking for that New York session. Right, New York kicks in. Cool. So this is the New York Open. Remember what I said about what goes up must come back down at some point. Now, does that mean I'm just looking for sells? No, not at all. I could carry on up if I wanted to. So I got options, all right? So let's put a breakout line to the upside. And then let's put a breakout line down there, because this is the higher low. This is the higher high. Whatever breaks. Boom. All right, let's just deep that for a second. So EMAs, Liquidity Pro. Okay. Let's get that there. All right, so they're already swept out by this. It's not really giving us any targets. But just because them lines are dashed, we can target those lines still. So this is still TPs right there, these dashed lines. Now let's put a breakout there, 4 pip stop, and we can target this, or we can target a 1 to 2, and let's see what happens. All right, cool. So it didn't quite smash the 1 to 2, but it smashed this TP, and then it rebounded and it bounced back off. That's absolutely fine. All right. So let's get rid of these lines now. All right, so let's have another little look. All right, so what have we got now? We got more options. So if we break to the upside, we target this 4-hour liquidity. If we break to the downside, we target them lines there, whichever way it breaks. Honestly, look at that. Look at that. Boom. 4 pip stop. Smokes it. And to be honest, it probably smokes this. Probably smokes that whole 4-hour liquidity. Look at that. Look at that. It's like fucking artwork. And this is nothing to do with NASDAQ, the stock market open, the 9:30 open. None of that. These are random times after New York and before New York and London, all right? It's like that. Let's just do one more. And all of these days are recent. This is all this week. Let's go back to the day before. Right, pre-Londons. So I do trade pre-Londons, okay? Now, I can see that we're bullish. Cool, we're bullish. We're respecting the EMA. I'm looking for breaks to the upside. Okay, so we're kind of breaking down now. But then I can put my entry there. So if I'm looking for sells, I want to see it fully change and start trending, all right? But until then, you know, I'm still looking for buys until we get some shit like this. And then I can put my breakout line there. So let's just see what happens. Okay, my breakout line can go there now because we got some structure and a breakout line above. So if we break to the upside, I'm targeting this, maybe even this, 4 pip stop below the EMAs basically. And if it breaks to the downside, I could target this, 4 pip stop. Boom. All right, cool. All right, it's back at entry, retested. Still though, on the way. All right, didn't quite get to that 4-hour liquidity, but where did it get? Still, a 1 to 3. Awesome. Amazing stuff. And you might have even used a 3 pip stop and got a bigger risk to reward. It doesn't matter. That's a fire pre-London, okay? See how London looks. All right, so now you can kind of see prices in the middle. So take a look at where the EMA is. It's in the middle of price. It's not really trending. We need to see a nice clear trend. All right, so it's in the middle. Is scatty. We don't trade this. We don't like this. This is exactly what we don't trade, all right? So we don't trade none of this bullshit. We wait for the New York now. Okay, so it's just consolidating. Now the New York comes in. Boom. So New York opens. Oh no, it's not a New York open, sorry yet. There we go, New York open. Boom. Now, this is what I'm talking about. So you can trade the stock market open if you want. The volume's going to be there, of course. It's the stock market open. All right? It's going to give you breaks. That's absolutely clean. Or you can wait for that crazy shit to be out the way with and wait for a little bit later on in the session for price to actually start trending. All right? So this is too scatty. None of this is an actual trend. This is just up and down volume. All right, there we go. But by then, I'd call it a day, probably. I wouldn't want to look for a trade. But let's just push it. Let's just actually see if we find an evening trade. No, consolidation. There we go. Nothing. There's no actual... All right, so we don't want to know. And let's do one more day before. One more day before. I want a nasty looking day. So, nasty, horrible looking day. Let's just treat it, though, how we would be doing. So, right now, we're respecting the EMA to the upside. So, it's looking better for buys. Okay, now we broke to the downside. So we put a breakout line there. Now it's either going to start trending up or it's going to start trending down. Whatever it does, I'm there for it, yeah? Boom. Honestly, you get in there, stop loss above them EMAs. I mean, I don't know if it gets there. Maybe. Like magic. No? So there you go. 1 minute time frame, gold, EMAs, direction, and fucking breakout lines. Not even no support and resistance. That's how easy it is. So... if you enjoyed this video, give it a thumbs up, subscribe, get the algorithm going, and I'll catch you in the next one. Bless.